Bloom Ventures has announced the first close of their new opportunity fund, Fund 1. This is Bloom's third growth fund, and they have already raised 200 crores of the 400 crore target with visibility for the remaining corpus. Now, this new fund comes soon after the close of a massive $290 million fund for last year in a market perceived as adverse to fundraising. To elaborate on plans with the new fund, joining me now is Ashish Fafaria, partner at Bloom Ventures. Also joining us is my colleague Ritu. Ashish, welcome back to Startup Street. Now, I believe 3/4 of the corpus would be used to buy assets held by your current funds, providing investors with an exit strategy. If you could elaborate on the fund allocation plans, Ashish.
Sure. Thank you. So we're looking at raising 400 crore plus, and we of course have green shoe option as well to be able to raise more in case we have the requisite demand. In the past, we've had the need to exercise it, so let's see how it goes. Of the target 400, we are having visibility and we have just passed 300. First close was 200, and we have been in the market since late last year. And the allocation plan of this fund is to make sure that half the corpus is utilized to go deeper into our winners, where we want to invest more primary capital. And the other half would be utilized to buy out stakes where we have very high quality assets and where we believe that there would be an IPO possibility over the next 3 to 4 years, where there are new investors coming in. So rather than exiting these businesses to those incoming investors, we are meaning to use this corpus to buy out from a legacy fund so that it's a win-win-win across all the three stakeholders.
All right, Ashish, hi, this is Ritu, and thanks for explaining that strategy, of course. But of this 500 crore, and now of course you've raised half. Was it challenging raising capital in the current environment, and what is the visibility? By when are you looking to close this 400 crore amount? And also, what kind of investors you're in talks with, and how soon you'll be deploying the capital?
So I'll break this up into the three parts exactly that you said, Ritu. It is definitely a challenging environment, and we did see a fair bit of skepticism that has been there in the market, particularly coming in from the euphoria and the momentum of 2021. The environment definitely is not conducive for exits, etc. So when we went out to the market, we were coming on the back of our successful track record. We have already had a meaningful track record where we have had exits in the past, and we have had oversubscription consistently across all of our funds. So to that extent, yes, the process was relatively slower to what it was during the last time we had raised a similar fund back in 2020. But at the same time, when it comes to the appetite, we have seen consistently that if you are able to go out in the market and give clarity on how you are going to utilize funds, your past track record resonates with what you are looking to deploy into, people have rallied up. Okay. So the investor base includes some of the largest of the family offices in India. And what we have now, additional demand coming from is from a couple of corporate VCs and a fund of funds. So that's where we are at in terms of the 300 of the 400 that's spoken for. And we have already made 3 investments utilizing the corpus of the first close. And we'll be looking at closing 2 more over the next 45 days. Okay. In terms of the timeline, Ritu, we are looking at wrapping this effort up around the August timeframe, given that we are just at the last leg. If there is oversubscription, fair, we will look at it in the same time frame. Okay. But broadly, the intent is to wrap it up sooner than later.
All right, Ashish. So you've made 3 investments and you're closing up 2 more. Let's now quickly talk about secondary funds and the exit opportunities in the current environment. You touched on it a little bit. It's a common practice across the globe for fund managers to raise secondary or continuity funds to provide exits to LPs. If you could elaborate on this structure and how Bloom is ensuring LPs see timely liquidity and then channelize that money back into the Indian ecosystem.
Sure. So broadly, Shruti, it is a common practice that when you have a 10-year fund, it does eventually either the companies have to go and list, and Indian markets have seen the first batch of companies list only in 2021. That was not the one of the best phases post listing, but that's a separate topic. And or the other alternative for fund managers is to go out there and sell it to secondary fund managers. India doesn't have a large access to some of these opportunities, and what ends up happening is that a secondary fund manager will buy out these assets from a VC like us. And at times, these will be carried out within the 8th, 9th, or the 10th year of the fund, sometimes just after it. So, what we're trying to do here is rather than go and work with an external third party secondaries exit provider, we are doing that ourselves, because all of these companies where we are carrying out those exits have a benchmark price that has been arrived at by other investors who are investing already. Given that there is a benchmark price already available, and that too in an environment like this, so one can imagine that we are in the midst of valuation corrections, and we are having an investor who has already come into these companies which are scaled up and doing well. There is a benchmark price that has been set. We're actually transferring at the same benchmark price which an external investor has set. So that's typically the way the process works. It is a newer structure and new opportunity so far as India is concerned. We did that once in 2020, and that fund is a similar $50 million fund called Fund 1X. And that has done incredibly well as well. 4 of those companies raised a follow-on round eventually, and 3 of those 4 have raised in this environment where there has been a lot of stress around, but at valuations which are even better than that. So the market does have appreciation.
Ashish, we're running out of time, so very quickly before we wrap up, all of this money you're raising, you're putting into your own, portfolio companies. Is there a broader theme you're working with, and how many of these companies you've identified will qualify for an IPO in the near term?
So it's a very close knit fund. 9 companies in the portfolio, all pre-disclosed. We do have the ability to shuffle about 25% of this, but the 75% of the corpus will go into these identified opportunities. My reasonable estimate is that at least half of these 9 businesses, at the very least, would go out there and list over the next 4 to 5 year timeline, possibly more. But I definitely can visualize the likes of Purple, Exotel, and Turtlemint, and a few others to go out there and list in the public domain over the next few years.